What is going on, traders? Welcome back to the Traveling Trader. Is the stock market going to crash again? Will the stock market crash? I'll go over the technicals in a chart. Yes, the boring stuff or the exciting stuff for some of you. And then we'll go over something that one of the chief strategists at Morgan Stanley said and why he thinks we're following a typical recession playbook. Not necessarily my opinion, but I definitely like to source different opinions from experts in this field. And if you get anything out of this video, go ahead and leave it a big thumbs up. It goes a long way. And let me know in the comment section below if you think we are facing another crash or if we'll continue back to all-time highs. Let us get right into it. Looking at the S&P 500, this is the SPY chart actually. I've gone over this several times, but we have two areas of sideways trading here that you see. And the reason I highlighted this is because this is where the SPY is comfortable trading at in recent times. And you can see that it is struggling to get above the 200 moving average, which is the green on my chart here. And I was saying that this is going to be a pretty big resistance cluster. It's going to take a lot for us to get above this. It's also at some key Fibonacci levels here. And you can see every time we cross 300, which is definitely a psychological level, right? It's a huge round number. Every time we cross 300, we get pressured back down. Now, because we started buying stocks the week of the stimulus and shortly thereafter, I do have a hedge on the SPY. I do have a $300 put. Not a $300 put, but a put at $300 strike price on the SPY just as a hedge. And I do also have a volatility call option as a hedge as well because I have a good amount of stocks that I want to protect. So if the market does start retracing, those options start going up and I get to book profits on these options while some of the stocks might lose some of the gains that we've made thus far. And I send out all these trades, including my hedges and my option plays in the trade alert. So sign up if you want access to that below. Our portfolio is full of blue chips that have gained double-digit percentages since the bottom of this crash. And I'll definitely be ready to take profits if we start correcting again. I think there's a very good chance we fall back into this trading range here, this rectangle here. So let us take a look at what one of the chief strategists at Morgan Stanley says and why he thinks the stock market and stocks are following a typical recession playbook. Let's take a listen and I'll give you my reaction.
Mike, I don't know how much attention you should pay to one morning's price action, but I was quite surprised to see the equity market as high as it is this morning. What do you think is behind it?
Yeah, I mean, I would agree to some extent. I think part of it is the fact that sentiment has remained decidedly bearish over the last month and a half and skeptical. And I think what we're seeing now, John, quite frankly, is a capitulation on kind of that theme I was just laying out. I think a lot of people were fighting that typical playbook because they just didn't want to trust it given the nature of this crisis. And now they're realizing that, you know what, it is the same and I missed it and now I got to get involved. So this is probably the bad part of the rally, meaning this is the low quality part of the rally where you get a breakout above the 200-day moving average, you suck everybody in, the trend followers, and then we'll probably have some sort of corrective activity following this. It's also right around a holiday period, which tends to be, less liquid, and you get these kind.
All right, so he brought up a couple of great points there. He talked about capitulation. When we think of capitulation, we only think of capitulating when stocks are going down. So if you take a look at the traditional capitulation graph, right, you'll see that during a bull market, after we start to crash at the peak of the bull market, then you get the fear and then the capitulation. But he's not talking about this capitulation period where where traders are panic selling all the way down. He's talking about a different capitulation, which is on the way up. And this is something that we don't typically hear. But the capitulation that he's talking about in stocks on the way up is when the FOMO buyers come in and they, somewhere at the peak of this rally, they start feeling an overwhelming sense of the fear of missing out. Oh my God, I missed the bottom. I'm such an idiot. Everybody's making money but me. Let me jump in here at the peak. And he's saying that especially as we cross the 200-day moving average, and again, that 300 on the SPY, which is a major psychological level, that's when the FOMO buyers, or for lack of a better term, the dumb money, comes in. And I really like what he said there because you don't ever hear of people talking about a capitulation on the way up, or you hear people talk about it less than the capitulation on the way down when people are panic selling. Now, what do I think? I do think that there's a lot of merit in what he's saying. It doesn't make sense that we go back and reach all-time highs this quickly. Now, whether we go lower than the pandemic peak low, I don't know. But like I said, falling back into these sideways trading ranges, especially this one here, I think is very plausible. And even if you take a look at something like the Smart Money Index, which I have here at the bottom, you could see that the Smart Money Index shows that the smart money is currently exiting the SPY. And it's a kind of divergence because the smart money is declining while the SPY is peaking. And in terms of what I'm doing to protect my portfolio, I do have a couple of hedge options. I have an option on the SPY at the 300 strike, and I also have a call option on volatility in case we see a volatility spike when the S&P drops. I've gone over this in previous videos as well. I do have iron condors. I do have iron condors open on low volatility stocks like Home Depot, which I'm up around 35% on. I also shorted Zoom, among others, because there were stocks that were looking extended. So there's a variety of ways that you could play this market. Again, I send all this out in the trade alerts below. And what I would also plan on focusing on is picking up blue chips on the discount. We don't need to rewrite or reinvent the wheel here, right? So you have CRM like Salesforce, seeing a period of drawdown here, down about 3% over the last couple of days. Johnson & Johnson down almost to the 50-day moving average, testing the 100-day moving average, a blue chip stock that might even be the first to develop a vaccine. Nvidia here dropping to the 21 moving average. You could see that it loves the 21 moving average historically. Obviously, this crash is an anomaly, but historically, every time it falls to the 21 moving average, you can count on Nvidia to bounce back up. Beyond Meat is another one that fell to the 21 moving average, currently a little bit below. I'll definitely be picking some up here, maybe even at the 200 moving average. Anyway, short, sweet, quick video for you. Like I said, I do think the most plausible scenario is that the SPY goes back into the sideways trading range here. And if you're wondering what this range is on my chart, it's between, I would say, around 270 and 295. And if it falls below that, I'll look at this range here between around 240 and 265. I will have already exited for profits on most of my positions and will have picked up these cheap blue chips that are at a discount right now. And if I miss the bottom, the way that I would play it is I would keep cash on hand and just scale into these blue chips slowly. There's no need to rush all in. Don't be a victim to the rally or the FOMO capitulation that we talked about earlier. Anyway, that is it for this video. Go ahead and leave a comment down below. Let me know if you think we're facing another crash or not. Leave a thumbs up if you get anything out of this video. If you want access to the trade alerts, the option alerts, etc., link is in the description. If you want help with options and need one-on-one training with me, I do take a handful of people that I do one-on-one training with over video conference, audio conference. We do that for 3-hour-long sessions a month. I'm obviously all booked up for May. We're almost done with May anyway, but if you want for June, hit me up, let me know. Lastly, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.